Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with your morning market preparation video for December 17th, 2018. Well, all of a sudden yesterday, after that huge gap up in the morning, it seems that traders found the sell button again on their brokerage platform. It's been missing for a while, but they seem to have found it all of a sudden. Yesterday, the huge gap up just really lended itself well to taking profits on a lot of trades, and that's what happened kind of across the market yesterday. And I know there's massive speculation out there that this was the market top. This was the blow off. Be prepared for a whole bunch of selling. It's over. You know, the gloom and doomers came out. Get ready for the big correction of 2018. Well, let's take a breath on this and remember that one day down does not make a trend. Not only that, let's take a look at the actual trend. The trend did not give up yesterday. Could we move lower? Yes, absolutely we could, but let's notice that we're staying, at least for now, we're above a rising trend. The market is still in a bullish move up. Let's also keep in mind that the futures right now are pushing for a very bullish open this morning. Dow futures currently pointing to more than 130% gain at the market open, taking back a large portion of that move. And we have a big round of earnings this morning, and they're already starting to roll in that could easily affect this market. Goldman Sachs just reported earnings, which were better than expected. The market is not really reacting to that, at least at the moment, as I can see here. And we'll have Bank of America reporting earnings this morning. Looks like they may have reported, and the market is showing a little pullback. Well, no, it must not have reported yet. Something's going on here. It's not moving much. USB reports this morning, and as these big banks report, we can expect the market to respond or react to those numbers. Will it be a game changer? Couldn't say that. Will they be enough to prove that these lofty levels are valid, that they can actually hold these lofty levels? Don't know. I just know that earnings are going to affect things dramatically here, and we should expect, one thing that this did indicate to us is that volatility may be back, and we could see some higher volatility as we move forward. But let's not lose focus of the trend. Let's not, expect that the bulls are just going to give up real easy, because I don't think that's going to happen. Let's also take a look and remember that yesterday we set new record highs in the diamonds, the SPY still holding uptrend, the Qs still holding uptrend, new record highs yesterday, and the IWM, which actually put in a very bearish looking candle yesterday, an evening star or bearish dark cloud cover type pattern here, but keep in mind it did hold the uptrend. So nothing here has fallen apart just yet, so kind of keep that in mind. Remember, one day does not make a trend. Let's take a look at the VIX. The VIX had a substantial move up yesterday as that fear kind of welled up in the market, but notice that we still haven't broke out of this long downtrend to the downside. So even though the fear did come into play yesterday, it certainly was not unexpected that could occur on a huge gap up like that, but also not critical in just completely reversing this market just yet. Not saying it can't happen. It certainly can, but let's not panic at this point. Right Way Options took some great profits yesterday, bagging some gains in several trades, and still holding some more than 100% winners in other trades that still continue to look very, very good. So keep in mind, the market is not likely to just immediately reverse and go down substantially for a long period of time. We get back and forth. Now, do expect additional volatility. Let's take a look at T21 22, which is the 4-week new high, new low ratio. And let's notice that we're right back here in the middle. We have the potential for going either direction here fairly easily. So nothing is overly bullish or overly bearish here. And remember, those bulls have just been extremely strong. And as we move forward into earnings, we can expect a lot more volatility in the market. Should be fairly obvious that that could occur. These companies are going to have to justify that their earnings growth is enough to sustain or warrant the levels that we're seeing in the market. And so expect for some additional volatility. It may not be quite as easy trading in the days ahead with a lot of volatility. For newer, inexperienced traders, this can be very challenging because we can see big intraday swings here. Remember, yesterday was basically a 500 point. The market covered on the Dow more than 500 points between high and low. So we gapped up and moved back down, covering 500 points of travel throughout the day. We could start seeing some big moves intraday if this is a topping pattern, or is it possible, could we slip into a consolidation right here and just move sideways? So let's not panic. Let's stay focused to our price action. Let's stay focused to our rules and see where we go from here. Right now, it looks like the market is reacting to the Goldman report. Goldman is slipping back here a little bit. Even though it reported very strong earnings, apparently it wasn't enough to satisfy the market, or perhaps they're expecting something in the conference call that could show something bearish. So we're getting a little bit of a pullback, but we're still looking at more than a 100-point gap up this morning. So let's take a look at the economic calendar. The economic calendar today has quite a few things on it. Industrial production, very important number. That's expected to slightly increase today. We have the housing market index that is also looking to move slightly higher. It is a little soft, but expected to move higher. The beige book, which really would not be expected to move the market around, this is really important to the FOMC as they move forward. It's kind of their book of details on whether or not interest rates are where they should be. We have 3 Fed speakers today, and then remember, Treasury International Capital comes out, which kind of tracks the money transactions flowing in and out of the U.S. Don't expect any of those to move the market at all, so kind of keep that in mind. We also have a big day tomorrow, okay, on the economic calendar. So, we want to be prepared for that. Could see a lot of movement around so many big reports tomorrow. On the economic on the earnings calendar, we had about 30 companies reporting today. Remember, among them was Goldman Sachs, USB, Bank of America. We've got Fastenal. We've got After the Bell. We've got Alcoa. We've got some regional bank reports after the bell, and Kinder Morgan will be after the bell. So this is going to start ramping up toward the really big days in earnings, which are coming really beginning next week is when some of those big days start to occur, and we start to see hundreds of earnings reports rather than just 30 or 40 at a time. So with that, everyone, I want to wish you all a fantastic day. Hope everyone takes a little caution. Also works really, really hard on their preparation for the day. That can save you a bunch. And that's what this video is for, is to kind of give everyone just a little bit of preparation for the day. And if you find this useful, please feel free to share this with anyone. It's part of my day, and if you find it to be useful for you, please take advantage of that. Also, do me a favor, if you could click that subscribe button on YouTube, the follow me button on Facebook, and click those thumbs up buttons. That helps me out a ton. Thank you very much for everyone who drops those really nice comments on these videos. I really do appreciate it. Everyone, take care. Have an awesome day. I wish you great profits. Talk to you all very, very soon, bright and early tomorrow morning. Have a good one.